Is it possible to pay 0% withholding tax on your dividends? This is when you have a company that runs a business and you want to take out all the profit of your company and you already paid the corporate tax at the corporate level. Why you have to pay also the dividend? My name is Andrea Papitto and this is Esentaxa. We explain to people how to optimize their taxes if they want to establish their business in Europe, but also if you want to establish also yourself in one of the European countries. We are the #1 channel that in English language explains also certain jurisdictions such as Italy, Portugal, Belgium and Republic of San Marino, Albania. So we cover quite a lot of jurisdiction in Europe and we explain, as I said, in English language all the details of the law, all the tax optimization that are not easy to find online with a simple search, and we help people to understand exactly which is the tax burden if they choose a specific country, if they pick up a new country for relocation, and we tell to people, look, this country is too much for you, for your taxation point of view, it's not convenient, otherwise you change another, you can look up at another destination because your purpose is just to pay less tax possible, okay? Now, in this specific video, I just want to talk about the way of withdraw dividends from your company if you want to establish a company in European Union, and which is the mechanism that allows you to withdraw dividend at 0%. Well, it exists a mechanism in Europe, a tax regime, which is adopted by all the European Union countries, okay? This tax regime is called PEX, or known as participation exemption. So basically it allows you to have a way of withdraw dividend and using two companies, one is the holding and one is the operative one, okay? So imagine you want to establish a business in Italy, for example, and you run a business there, you have a shop, or you're basically running your Airbnb, classical business that a lot of foreign people wants to have in Italy. So your business is going well and you make some profit out of it. Good. You pay the corporate tax, that's fine. Then in Esentaxa we also explain how to reduce the corporate tax. If you subscribe the channel, you will know how to do it, because the next video will explain how to do it actually. But anyway, so we manage to squeeze the corporate tax, you pay some corporate tax, but then you want to try to optimize taxes on the dividend level and pay as less as possible. Well, if you establish a holding company in Europe under certain conditions, you are qualified for the PEX regime, for the participation exemption regime. The participation exemption regime in most of the cases allows you to, well, it grants you 95% exemption on your dividends, okay? The condition is that who receives the dividend, it's just another company. It's what we call a holding company, or simply another company, another limited liability company, okay? And only under certain conditions, such as owning at least 10% of the share, for example, or owning the share of the child company, or called a subsidiary company, for at least 12 months. And each country actually implements different constraints, but more or less, they are almost the same all around Europe. There are just a few differences. So if you respect all these requirements, you can basically have 95% of your dividend tax-free, and only 5% of your dividend will be basically subject to the corporate tax at the holding level, okay? So the money comes from the operative company, flows in your holding, and only 5% of this amount of money will be subject to the corporate taxation at the holding level. Just to give you some numbers, just to understand the idea behind it. It's very easy. Let's imagine you make 100,000 euro in dividends. You need to withdraw 100,000 euro in dividends, okay? 95,000 is tax-free, it flows to your holding company tax-free, and only 5,000 will be subject to corporate tax at the holding level. Could be 20%, 24% based on the country where you have established the company. The holding. If you have established the holding in a country which applies 95% deduction under the PEX regime, you basically are subject to the 24% only on the 5%. In Italy, just 1.2% at the end of it, at the end of the day. Good. But keep in mind that the 95% is not the only percentage in place in Europe. We have also the 100% PEX exemption, 100% participation exemption regime, which is implemented by certain countries in Europe. For example, Belgium applies the 100% participation exemption, Greece applies 100% participation exemption, Luxembourg, Cyprus, etc., etc. There are other jurisdictions in Europe in which it's more convenient to establish the holding company because basically the entire dividend is tax-free from your operative company that could be settled in whatever country in Europe, and then you can make your dividend flow in your holding tax-free. Now, it's true that the money flows into another company, not flows in your pocket. But if you need to use the holding for investment purposes, well, it's a hell of tax savings, because basically we save all the dividends, no tax to pay, and all this amount of money flows into another jurisdiction in which you want to maybe use for investment reasons. And then there are other optimization at the individual level that we can apply. And again, here in Esentaxa, we also help people to understand how to reduce taxes on personal level, the dividend on personal level. And just I want to remind you that in the description below the video, you have our email contact, info@esentaxa.com, where you can write us, or the calendar link in which you can book straight a consultation of 1 hour call, 2 hour call, 20 minutes call if you have just a few questions, just a preliminary call if you want, or even better, a tax simulation to understand if a relocation makes sense in a specific country, considering your specific structure. Okay? So this is how it works, the tax regime in Europe. And you might wonder, what about the companies outside the European Union? Okay? So the tax regime works for all European Union countries, we understood that so far, but what about a holding company that I want to establish outside Europe? Okay, so let's imagine I have my operative company in Spain, but my holding is, I don't know, in Hong Kong, for example. So there it's all about checking the convention to avoid the double taxation between Spain and Hong Kong, for this specific example that I just said. We have to check if the conventions between those two countries requires or implemented some similar tax regime, which has a different name, of course, between those two countries. But you see, each and every country outside Europe must be checked with a specific convention to avoid the double taxation, to see if a sort of similar tax regime has been implemented. And here comes the reason why certain countries in Europe are such a sort of tax paradise, or they are used or exploited to extremely heavy tax planification or aggressive tax planification. For example, Netherlands is one of those countries that implement the tax regime at the European level, but Netherlands also has the external tax to all the non-European country outside, in which you can basically add an holding company. In Netherlands, receive 0% dividend tax, and receive dividend with 0% dividend tax, and then basically send out of Netherlands, in whatever country with Netherlands has the convention, send the money there tax-free as well. This is just an example. So it's all about checking the convention to avoid the double taxation between the European country and the country outside EU. Last words about this point: whenever you establish a company in a different country, you have to make sure that that country doesn't qualify that company a fake one, okay? Or the country of origin does not requalify that holding company as a fake holding company, just a mean to avoid taxes. So be careful about this point. And here in Esentaxa, we also help to understand how establish companies, holdings, operative companies in different European countries without encountering problem with local tax authorities. Okay, so we double check also the tax residency of the company structure. Thank you for watching this video. That's all for this time. Notification bell, a like button, and subscribe the channel please, to help us grow and to be always updated for free whenever we release this kind of content. See you. Bye.